let's get started. Let me first remind all of you that the purpose of this event is education. I'm not going to provide specific trade alerts, nor am I going to provide specific trade recommendations. We will take a look back at the rather wild trading day that's behind us, and take a look ahead what tomorrow might bring. What I'm thinking about tomorrow. Let's see if I can find this. Little shameless plug. Of course, it's at Epic Street, so for a good cause here. Webinar tomorrow. Chief Currency Coach Will McDonald conducting his monthly webinar for NFP. And there it is. Link for you to register for that event. I'll be there. Most, if not all, the other currency coaches at FX Bootcamp will be there. Mod and others that I believe from FX Street will be there. So come join us. We'll see what the latest NFP report has to bring. So today, wow, what a choppy day. But tradable, actually tradable. At least from my perspective, tradable. I often show you this view of multiple currency pairs, and actually one view showing, I'm showing S&P futures here, but normally I show, and let me cue it back up again, DAX futures. I show DAX futures because we've seen over time, over the past several weeks, modes or let's just say phases of correlation, if you will, between the Euro USD and DAX futures. So I'm tracking DAX futures really more than anything else when it comes to the equity markets. I'll check S&P from time to time, and even give a cursory look at the Dow or the CAC 40, the main French stock market index. But and of course, I'm always watching the bond markets, U.S. bond markets, European bond markets, particularly like the Bund and especially the Italian 10-year and things like that. But this is I'm keeping an eye on the markets, but by and large, there's one security here, if you will, one thing that I'm watching the most, and I'm sure many of you have already figured out what that is. That's the Euro USD. And what can I say? The euro. Let me go to a chart without indicators, without even any lines, to emphasize, to really give you some perspective on trading on the price action on the euro this week. I want to get to a view that shows all the price action I want to show. Actually, this is almost perfect. This is pretty much perfect. This is exactly what I want to show here. I'm showing price action from early Asian session trading on Monday. I believe, I'm showing a little piece of Friday's price action, but this is for the most part all of this trading week up to this point. Early Monday through right now. Some of you may recall we discussed the intervention by Japan, which gave the dollar a bit of a bid in early Asian session trading. That was actually a notable drop in the Euro USD. Very common for the euro to drop and the dollar to strengthen on the back of intervention by Japan. That's virtually every time Japan has intervened, the dollar has gained some strength, and it kind of makes sense. What does Japan would do when they intervene? They buy dollars. When it comes to intervention, Japan targets the dollar yen for that. So anyway, the dollar firms up. Now, some of you may recall it was like minutes, maybe no more than maybe 20 minutes, as I recall, after my webinar here on Monday. The word hit the markets that the Greek Prime Minister was calling for a referendum on the Eurozone deal and package struck last week by European leaders at the EU summit, which ended late Wednesday, early Thursday for some. And that, as I saw it, was one of the key drivers of the move down that you saw through Tuesday. And since then, it's been up, down, up, down. You could argue we've been in a phase of consolidation, a range of consolidation since then. And I'll show you some different other charts showing different lines of prospective support and resistance. If you watch my New York session video review, which I posted on the Forex Street blog late yesterday, talked about a line at 1.3825. Let me add that now. And let's zoom out on this chart for a look at evidence as to why that's been important. Let me zoom in a little further. Yeah, I'll leave it here. No, I guess I will zoom in after all, because I do like the detail. I can see here. Okay, I'm highlighting with red arrows some examples of how the 1.3825 level has been, how it's been important. I'm not going to highlight all the examples, but you can see some examples of how the euro has turned from either up to down or from down to up in the 1.3825 area, and that area also defined yesterday's high. So you've got that going on. 1.3825 area was resistance yesterday. It's been important in the past. Now for support, I believe it was on October 20th. And you can see here near the bottom of this chart, we saw some lows for this pair around 1.3660. And I was going to make the line a different color, but I'll just leave it that color. And folks, that's it. That's been the trading range for the euro. Now, today's price action, it may look a lot looking at a 4-hour chart here, looking at the right-hand side at today's price action, looks a lot easier than what really traded. It arguably was not easy to trade, especially when we had, let me get back to the 15-minute chart. We had a lot of rumor-driven moves in today's market. The rise in the euro during today's London session was fairly measured, fairly reasonable, fairly well-paced. It wasn't unusually volatile, but then the volatility, that picked up starting about 8:30 a.m. New York time. First of all, we got an initial drop after the test of the 38.25 area, which I mentioned earlier. Then we got the at least by some measures, a surprising rate cut by the ECB. It wasn't a total surprise for everyone. There was talk about a rate cut coming from the ECB. At least some analysts and economists, as I mentioned, I believe in yesterday's webinar, some were talking about a prospect of a rate cut. So I guess that actually, I thought they would have waited another month for that, but maybe, I don't know, the rising bond yields in Italy and the referendum called by Greece and all the uncertainty in markets, it could have been driving factors behind the reason why Draghi in his new role as ECB president pushed for, along with his ECB governing council members, a rate cut today. But even after the rate cut, the market was the euro was going up, down in response to rumors about things like, is the referendum going to happen? Is it on? Is it off? Is the Greek Prime Minister going to keep his job? Is he in? Is he out? There's a confidence vote tomorrow. Is that going to happen or not? It may look a little bit logical in hindsight, but there was a lot of chip-choppy price action in response to every little rumor, every little report that hit the market. So it was not in terms of trading anything in between this range, that was difficult. I saw that as difficult. Trading anything in the middle of this range, rather difficult. Not impossible, but difficult. But the range itself, you had plenty of evidence, plenty of prior evidence in days past that 38.25 has been both a floor and more recently a ceiling for the euro. And then 36.60 has been a floor, as I mentioned earlier, it was October 18th and 20th. Oh, another thing I don't show here, if you back out to a 4-hour chart, or even a daily chart for that matter, case can be made for a trend line going back to the early October low. Something like that. Oh, Coco couldn't wait to ask me a question. Coco, you could argue it doesn't affect the dollar yen, and at least not directly. I don't know if that helps, but the move by the ECB, no, not a real driving factor for the dollar yen. Coco, when it comes to dollar yen, and this is big picture type stuff. There's not a perfect intraday correlation, for example. But if you want to know what one of the big driving factors historically for the dollar yen, watch like say the 10-year T-note yield or the 2-year T-note yield, or the interest rate differentials between say the Japanese 2-year and the U.S. 2-year, or compare the 10-year yields for those two countries. And of course, what are those? What affects those yields? Well, central banking policy is one thing. But if you're looking for an even simpler guide, I would look to the 10-year, the U.S. 10-year, and you look, well, of course, what drives that, at least in part, what drives that is Federal Reserve policy. And as I see it, for now, Fed policy is still on the accommodative side, and no signs in the near-term future of Fed policy turning from the easing mode that they're in now to some form of tightening policy, like selling assets on its balance sheet and raising rates. I mean, we're not even close to that. I mean, consider what the Fed announced last August. This past August, the Federal Reserve announced that it's a plan right now. It's subject to change, obviously, if conditions change. But the Federal Reserve is intending to leave the Fed funds rate essentially at the floor between 0 and 0.25% until mid-2013. I mean, on that basis alone, unless there's something else that drives the Japanese yen uniquely in some way, which is possible, on that basis alone, I'd expect the dollar yen to remain under relative pressure. End of story. And just if you want to boil down the dollar yen to simple terms, watch the 10-year yield on the 10-year Treasury, and that affected at least in part by Fed policy. And Fed policy, it looking to be remain accommodative for some time to come. Cocoa, for what it's worth, I rarely these days trade the dollar yen. Might it be something worth trading in the future? Yes. And if I had to guess, when would the dollar yen become an interesting trade, or for me especially the yen crosses make more interesting trading? If the sovereign debt concerns shift, or at least maybe shared with Europe, if sovereign debt concerns shift over to Japan. As many of you know, Japan's debt to GDP levels are extreme, well north of 200%. The difference with Japan is that the lion's share, almost the majority of Japan's sovereign debt is domestically held. But anyway, something to watch. Euro USD, by the way, back above 1.38. Probably headed for another test of 38.25 at this point. If there's another rumor that's driven the euro, I'm not aware of what it is. There may be something I just don't know. And again, I'm not here to provide live market commentary or price action, but latest report. Again, my point is this: the reports have been rampant, and again, it seems like 1 minute it's the Greek Prime Minister is going to resign, the next minute he's not resigning. And there's been conflicting reports about the so-called referendum that was announced Monday afternoon, New York time. So again, when you really look at price action over the course of this week, again, what can I say? We've had the sell-off on Monday, Tuesday, and it's been arguably consolidation since. So nothing's really changed, and that's interesting because when you consider the rate cut and the implications for further cut in rates, that's something in the past that has prompted some significant moves on the euro, but not today. So again, right or wrong, whether any of you like it or not, whether I like it or not, what's moving the euro today, or where the market's focus for today, it's on Greece. And of course, broadly speaking, the rest of Europe. It's not the ECB and what their next policy move arguably isn't what's driving the market right now. At least not in the big way. And as a trader, that's one of the things that you really have to become more focused on and watchful of, is whether you think the euro is too low or too high, or maybe it's cable, or maybe it's dollar yen, or whatever the pair you think it is. If you want to, what do I pay attention to? If that's what your question, folks, I pay attention to a combination of economic reports, news flow, and price action. Now, don't get me wrong. I pay attention to a lot of other things that can affect the so-called fundamentals and the, how relatively overvalued or undervalued the currency pair is, for example. But at the end of the day, I'm paying attention to, okay, what moves the market? What's the market moving in response to? And as I've said for what seemed like weeks now, it's Europe. It's Europe. So until the market gets tired of focusing on Europe and picks something else to focus on, I for one am going to focus on the Europe. There's the euro back near 138.25. So in essence, that was trading today. We talked in today's live classes at FX Bootcamp. We talked about a short at about 1.3825 earlier today. Now that short may be slightly risky in the context that came together just minutes before the release of a U.S. news report, namely U.S. weekly jobless claims. When I told the live classes that many U.S. news reports, particularly jobless claims, have not moved the market that much lately. I mean, the U.S. news, again, right or wrong, just has not packed a punch when it comes to moving the market. So as I saw it, that short trade earlier today, around 38.25, that came together, I believe, minutes before the release of the U.S. news, it wasn't that risky in the context of U.S. weekly jobless claims in particular have not moved the market that much. And, you could argue also that jobless claims oftentimes takes a back seat on the day before NFP, historically anyway. So it wasn't a crazy trade to take, short around 38.25 earlier today. And then, and actually that we talked about that trade from the perspective of front running the ECB press conference. Although admittedly I didn't expect a rate cut today, and we got that. So that gave the euro bears some help for those who shorted around 38.25. But the idea behind the short was to benefit from either the rate decision or especially the ECB press conference. It being incoming President Mario Draghi's first press conference as ECB president. So there certainly was going to be at least some attention on that. Oh, by the way, we also saw some of the U.S. news. The ISM non-manufacturing report, so-called ISM services report, came out at 10 a.m. New York time, and that report came out just before the euro hit this 36.60 area we talked about earlier. But as I said earlier, the U.S. news hasn't moved the market that much, and we had some chatter in boot camp about what was moving the market. There was I believe Draghi made a comment about China and some maybe the prospect of support from China for the eurozone, maybe China contributing more to the EFSF, the rescue fund and such. And there may be an announced truth of that, but again, as I see it, this market is just it's flinched here and there in response to, again, rumors about the referendum, rumors about the confidence vote, rumors about the Greek prime minister resigning or not. But by and large, if you zoom out and look at the forest and the trees, nothing's really changed today. Nothing has really changed. So we're kind of at okay, what now? What's next? And for now, what's next is going to be the NFP tomorrow. And, of course, I'm going to continue to watch news flow out of Europe. And that was, that maybe seemed like a rather brief, lacking in detail explanation, at least compared to what I've done in the past. But, folks, what can I say? It doesn't, that's all I got. That's all I got in terms of today's price action. I could talk about other pairs, but I mean, let me give you an example of why I don't talk about other pairs as much. Let's go to, let's start with Euro Yen as an example. I'm going to overlay this chart, overlay on this Euro USD chart some candles for the Euro Yen. And you tell me. So that the darker colored candles, those are candles, 15-minute candles for the Euro USD. The lighter colored candles are for the Euro Yen. Folks, I don't know about you, but you don't need to be a quant. You don't need to be a quant to define that, to conclude there's some pretty strong correlation between those two currency pairs. So if you wonder why I don't focus on, say, the yen crosses, well, that's one reason why. Let's look at a different pair. recall, the correlation with pound dollar wasn't quite as clean. But it was generally still there. The light colored candles in this chart are now for pound dollar. Now, pound dollar didn't fall quite as hard post their ECB rate decision as did the Euro USD. But when it comes to direction on pound dollar, whether pound dollar is moving up or down, that has moved in sync, generally in sync with the Euro USD. Anyway, I think I made my point about correlation. By the way, seasonal profit target for those who longed around at 36.60 earlier today. So what lies ahead? I need to open a website or the web page showing FX Street's calendar. And of course, I've already mentioned the one obvious source of prospective volatility tomorrow. That would be NFP. Hang on, I'm in level pointing that website in the background. No, Coco. I'm not going to bless any specific trade. Sorry, Brew. You're on your own. Let's switch to the Coco. I've already explained the history of the 38.25 area having an effect on the euro. Could it hold? Yes. Can I guarantee it's going to hold? No, I'm not going to guarantee anything. Well, I wish you luck on the trade. I wish you luck. So, I'm sorry for the delay. I'm pulling up in the background the calendar here. I've got too much open on my desktop. That's why I'm multitasking. I'm monitoring some other things as well. But I'm opening up the calendar from provided by FX Street, and we'll take a look at what's coming up here. And I must admit, it's maybe this is more of a plug for FX Street's calendar more than anything else, because what I just said earlier still applies. I mean, right or wrong, whether I like it or not, whether any of you like it or not, Europe is still driving this market. Simply put, Europe is still driving this market. So I don't expect until proven otherwise. I don't expect a great deal to come from a market reaction to, say, tomorrow's NFP report. But you know what, that report is important enough and is a pretty good gauge to the strength or lack thereof, maybe, in the U.S. economy. So it's definitely worth paying attention to, and even the market's response to tomorrow's NFP report could certainly upset any well laid out plans for trades on pairs like the euro during tomorrow's New York morning session. So I've got the FX Street calendar queued up here. And there's the NFP report, an IVPMI report out of Canada as well, but that's been known in the past to move the Canadian dollar, but not so much lately. That's a very volatile report, by the way, the IVPMI. The figures from that report are all over the place. And sometimes when you get a report like that just fluctuates so much, traders can just kind of tend to ignore it. German factory orders at times has been important, but again, I still would assume until proven otherwise that the market's going to virtually ignore data from the likes of Germany. And GAM, you've probably said it better than I do. That's really my take. Folks. Folks, if you don't have a source for news, if you're not tracking regularly the likes of FX Street, or there's some other live news feeds, or if you don't have, there's Bloomberg TV. You can catch Bloomberg TV on the internet. These are necessary tools for the trader, I believe. These are necessary tools for the trader because it's the kind of thing where you take a shot. Say, if I, for example, had I taken a shot short on, actually I did, but let's just speak in hypotheticals here. A trader who took a shot on the euro, and the euro drops to 138, say, and you're in profit, and you start to break even. If something hits the news about, about Greece or about Italy or whatever, or something positive out of Europe, whatever it is, and the euro jumps up rather quickly to 38.20 or 38.25, I want to know about it. I want to know what kind of news prompted the move, and I want to be able to make a decision about that. Do I stay in or do I get out? I do not want to be trading with blinders on. And I feel like if you are trading in isolation, watching only the charts, hearing nothing, having no access to anything, you are trading blind these days. You are trading blind. Now, having said that, if you are a newer trader and just find all this news, all this chatter, all these rumors, the headlines overwhelming, I don't blame you. I understand that. In fact, I've been there before. But here's what you've got to do. First of all, you should definitely be trading on a demo account. You should definitely not be putting your live account, your hard-earned money at stake in a market that's so headline driven right now. You should not be doing that. So you should step back, be trading on a demo account, and there are things you can work on. Even if you're not trading, and we talked about this at FX Bootcamp today. This isn't an idea I had to talk about, but it's something that I don't know how many of you practice on a daily basis. Let me go to a 5-minute chart here. I mean, we were talking about price action on the euro today and how, for example, there was a moment during today's latter part of today's London session, early part of my coaching session today. My coaching session is between 6 and 9 a.m. New York time. I'll recall we were talking about this hesitation here during the euro's London session rally. I mean, I don't know about you, but I noticed stuff like that. That's a clue to me. Now, we got choppy on the euro later in the day, but to me, that was a clue. That was a clue. Now, unfortunately, it wasn't anything that it was. Well, I guess you could argue that there could have been at least part of the basis for a trade on the euro later, but I sort of didn't see a very good one. But my point is this: we knew going into today the 3750 area. You put a horizontal line there now. We knew the 3750 area has been important in the past in the euro. And we got some hesitation a little above 3750. I mean, the 3750 area was the only thing that prompted a sort of hiccup in today's, or meaningful hiccup that is, in today's euro rally during the London session. And by the way, even after the, let me make this line 3750 blue. And there we go. And even after the rate cut by the ECB, once we got past the initial volatility, look how on the right-hand portion of this chart, look how the euro still lingered, was still stuck around 37.50 before finally it broke lower. Now, folks, I mean, that, even if you're not trading it, and then we had plenty of traders at FX Bootcamp who just sit back and watch this whole show unfold, the choppiness, the up downs, this pyramid all day. I mean, it was a spectator sport for some traders, and that's fine. That's fine. I emphasized during my coaching session, being neutral is a viable position. Now, when you can look at a price action on any given current pair at any given session, for some traders it can be great price action. In fact, for the proficient scalper, this was great price action today. Are you kidding me? The short at 38.25, the long around 36.60, great stuff. But we had some traders at FX Bootcamp who looked at this kind of price action, looked at the kind of volatility, and thought it's just not for me. It's not for them. So they stayed away. And that's, folks, that's okay, because later, whether it's maybe not tomorrow, but sometime next week, we're going to see trading conditions that are more conducive to those who who prefer trading under lower volatility conditions. But again, so on one hand, this pair today was very tradable, but on the other hand, the nature of the volatility, all the different news flow, some seemingly good, some seemingly bad for the euro. It provided ample reason for conservative traders, especially those who don't have a preference for scalping. It was valid reason to just sit back and just watch, be a spectator, and along the way, spot some clues in price action that can help you identify prospective support levels of support and resistance later. That can impact price action later. That can contribute to a trade plan for you later. Yeah, Mike, I agree. So there was some opportunities for but Mike, the key is for a scalper, for someone who's inclined to take these short-term trades. It was some decent scalping today. Well, and one thing you could take away from today's price action, actually not just today's, but even yesterday's price action, go back to that 4-hour chart. I mean, look at the number of times, actually even in late October, how this range has had some variant on price action. I mean, I would not be surprised if several of you attending this event right now have or take on a trade on the euro in the weeks to come based on at least one, maybe both, not at the same time, obviously, but based on either one or both of these horizontal maroon lines in the middle of my chart. So I wouldn't be surprised if, say, Mike, for example, has a trade in the coming days based on the 38.25 area, or Coco has a short trade based on the 36.60 area. Now, again, I don't expect, although the things I've seen stranger things, I don't expect trades based on both to come along anytime soon. Well, unless we stay range bound, which is, I guess, very possible. But you see where I'm going with that? I mean, even if you're not trading, I think this is where traders miss some good opportunities to gather intelligence during the live market. I mean, so many I hear of, and I'm actually kind of seeing it. So many traders are just hypnotized by price action, watching the ups and downs and asking, should I go long here? Should I go short here? What does stochastics tell me? Yeah, blah, 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 blah. Some valid questions, but rather than just watching the green and red on the candles, or say instead of watching the green and red on the candles, they should be gathering intelligence for future trades. And there are clues, not every session, not every pair, but there are clues to be gathered from price action in any given day. And some of those clues could contribute to trade plans later in coming sessions, in coming days, or in coming weeks. Yeah, sometimes watching is better. You know what? That's pretty common during fairly common during the ECB press conference day. I've seen plenty of ECB press conferences where the euro is up, it's down, but at the end of the day, nothing's really changed. And to some degree, you can make that argument today that really nothing's changed, but it did provide some decent tradable volatility. But again, if you're asking me, what has changed today? Well, if I have to conclude based on price action, has anything changed today? I would argue no. Nothing's really, at least in the market's eyes, in the broad market's view, right or wrong, nothing's really changed. I would still keep tabs on what's happening in Greece and specifically and in Europe in general until the market stops paying attention to such things. So I've got about 8 minutes left in this webinar. Folks, I can pick something else to talk about and talk about it for 10, 15, 20 minutes. If you've been in my webinars enough, you know that I can I can find something to talk about and ramble about it. But this would be just opening the floor here for questions. If you have a question, if you have a comment to make, this would be an opportune time to do so. And I'd be happy to tackle it. And I feel like I've missed a question or two in recent webinars that I was hoping to have time to address, and just ran out of time in the past to address them. I'm going to put this chart back to size. Notice how cable back at top of its recent trading range as well. Again, the correlation with the euro. Well, what's your objective by asking about that currency pair? What are you seeking? What are you seeking? I don't even know if I have it on this platform, do I? I'll be honest with you, that's not a pair I look at that much. And I also admit I got to ask you, why is it? What is it about that pair that appeals to you? By the way, I'm not picking you a Rend. I'm not trying to make you feel bad, and I'm not trying to make you feel embarrassed. If I better understand why you're asking about that pair and your objective or your trading that pair, I can probably better answer your question. I'll probably be better suited to answer your question. But again, I have to sort of like provide a disclaimer, if you will, that I just that's not a pair I look at that much. I really don't look at that pair that much. So I feel like I would kind of do you an injustice to go into great detail to tell about that, because I mean it'd be a sort of thing where I'd want to take a look at several different charts and I just I don't know. Instead of trading dollar Swissy. Well, Rend, I don't know if you hear my comment. I think I made the comment during yesterday's webinar here. When it comes to trading dollar Swissy, I'm not sure that that your choice of an alternative is is your only option. Let me show you a chart for dollar Swissy. And again, if you saw this demonstration yesterday, I apologize. I don't want to repeat myself too much. There's a chart for dollar Swissy, and let's overlay on this a chart for the euro. Now, maybe it's just me, but I swear these two are moving in a near perfect inverse or opposite correlation. As the dollar Swissy goes up, or really what's more of it, as the euro goes up, the dollar Swissy goes down, and vice versa. So I guess what I'm getting is this: if you're seeking an alternative to the dollar Swissy, maybe the question you need to ask yourself, or maybe you've already asked yourself the question. I just haven't seen the answer. Is what is it you're seeking when it comes to an alternative for the dollar Swissy? Is it something about, I don't know, was it something about Switzerland fundamentals that you found appealing? Was it the nature of the price action? What is it you're seeking here? And I'll tell you, I'll be honest with you. It's that many of the currency coaches at boot camp, at least a couple I know, we're spending a great deal of time on the Euro USD to the point where I'm sure for some of our members, it's flat out boring them. In fact, I'm sure some of you are bored to tears right now, doing nothing but talking about the euro. But folks, I'm telling you, I said this to our live class weeks ago. Maybe I've said at least once or twice here in these webinars. I'll say it again. I believe we're going to be talking about this recent price action on the Euro USD. We're going to be talking about the so-called currency market experts, count me among them or others, and we're going to be looking back years from now thinking, man, the trading on the Euro USD in 2011, 2012, or 2010, last year, couple of years, I mean, great stuff. Great stuff. I hope that I should pause for effect there, hoping that would hit home. Folks, I mean, the trading the stuff we lived through before the subprime mortgage crisis in August of 2007, before that hit. I mean, I still remember days on the Euro USD when we were happy to get 60 or 70 pips out of the euro on those days. And I became a currency coach at FX Boot Camp in May of 2007. And I remember those days when we were just thrilled to see a 10 pip, 15 minute candle, 15 pips maybe. I mean, the pips the euro used to move very much on on a pip by pip basis, and we look at pairs like at the time we looked at pairs like pound yen, like that's crazy. Well, it was not so crazy back in summer 2007. It was particularly crazy on some days to trade the yen crosses as the yen carry trade was unwinding. Well, my point is this: you have I want to emphasize you have in the case of the Euro USD and actually to some extent other currency pairs as well, good volatility. Some days I admit crazy, but not even the days when the volatility is high. You still have, when things settle down or when volatility diminishes a little bit, some evidence that's basic support and resistance, classic levels hold. So yeah, so Mike, I don't disagree that you say it's really volatile, but you know what what I'm getting at is this, and again, Ren, I'm trying not to dodge your question. I'm not trying to avoid your question about about an alternative to the dollar Swissy. Here's my point. If you're one point I want to make is this, and I'm trying to think of a delicate way to say this, and I don't know if I have a delicate way to say it, so I'm just going to say it. You might have to adjust your game. You might have to adjust your game to the market. You might have to become more comfortable with the volatility. Now, is there a pair that trades a less volatile fashion, but still moves, say in correlation with the Euro USD? I haven't looked for one, but maybe there is one. Another way to deal with the volatility is just, lower your lot size, lower your leverage. Allow for wider stops. Maybe it behooves some of you to take less shorter term trades and just look for some longer term stuff. Longer term meaning that lasts a day or two or three. Now I admit there's some conditions like what we've had the past couple of days where it's difficult to do that. It's difficult to hold the trade for longer than say a session. But I mean that's what goes to the cards you're dealt with. If you prefer to hold trades longer and don't want to mess with the choppiness, then you're going to have to accept that there's going to be some days you got nothing to show for it. And for those of you who are contemplating things like a position trade or a so-called swing trade, what some would call it, I mean, what can I say? You had a beauty. You had a beauty late last Thursday. Major trend line. I talked about this in last week's webinars. A major trend line on the weekly chart going back to the lows from June of last year. We overshot it a little bit but not by much. I mean, if you don't like the day-to-day volatility, how about that one? That was a viable short. Yeah, and again mentions the Aussie USD. That is an alternative. A lot of our boot campers, a lot of members at FX Bootcamp been siding with, and that's a viable alternative. In fact, let's look at that one now. I'm going to leave the Euro chart down. I'm going to overlay a chart for the Aussie. Although the Aussie had some volatility today as well. But, by and large, I've seen the same thing where the Aussie USD is, its moves can be a little tamer. But, again, I go back to the point where, for some of these moves are relative. And it's, for now at least, this may be the new norm. It's a more volatile market. It's a more volatile market. And there are even ways to address this in terms of the trading strategies. I mean, rather than trying to click the mouse button at the right time for a buy or sell, set up some entry orders. Look for an entry on a touch of a certain level, or there are ways around it. And of course, if you're struggling with the volatility on a particular currency pair, then practice makes perfect. Practice makes perfect. Well, maybe not perfect. There's a little perfection is kind of a goal that eludes virtually every trader. Once you think you've attained perfection, that's usually the day before you either trash your account or damage your account significantly, materially, as some might say. So be careful with that pursuit of perfection. You'll never get there. You got to accept that the market's going to just some days and some sessions do some things that make no sense whatsoever. For me, the key as a trader is to recognize when especially recognize in advance those times when the market can be more volatile than usual. And you know what? Today was exactly one of those days. If you watch, let me get rid of this overlay chart. If you've watched enough of these ECB press conference days, you know that the euro can be more volatile than normal on the day. Plus, you know the market. Well, maybe you don't know, but I'm telling you now. I'm trying to educate all of you now. We know that the market's been very sensitive to events in Europe. So combine sensitivity with the events in Europe. The euro has been historically a bit choppy at the very least on ECB press conference days. You have the first press conference for the incoming ECB president. Actually, a lot of other news today as well. And volatility on average on the euro has been, at least in terms of average daily range, has been on the high side anyway. I mean, you talk about, by the way, go euro. Sorry, Coco, about your short. I hope you got out. Again, I hope that worked out for you okay. At least minimize the damage there. So folks, you see where I'm going with that? You could have recognized some clues in advance as the possibility that the euro could be a bit choppy today. And there are ways to get around that. I'm still finding that, for example, there's still times when the euro is more tradable than others, where it's less volatile than others. The Asian session comes to mind. Sometimes early London session trading comes to mind. And of course, that's one of the challenges of the trader. Some of you may be looking for like the euro to behave just the way you like it at the time of day you are available to trade. Well, unfortunately, that's something that we can't control. So for some of you, depending on where you live, depending on your responsibilities in life, you may have to, trade at some times that are unusual for you, just to get the kind of market conditions that you are more comfortable in trading. Again, that's an alternative. Another alternative is just adapt, practice at trading the more volatile conditions. I'll tell you, here's an idea for you. And this is the way to kind of stretch your skills and your abilities. Find a pair that you consider even more volatile than the euro. I mean, pick one. I mean, you could just go to the charts and look at the different pairs and look at how much they move in a given day. Pick a pair that moves, I don't know, double in terms of pips per day. Pound Swissie may be an example. But pick a pair that moves on average in terms of pips more than the euro, consistently more than the euro, and trade that. Try trading that on a demo account. Do your normal analysis, identify support and resistance, and trade that pair. Don't worry so much about how profitable you are. Work on just the basic stuff, identification of support and resistance, and entries especially, managing the trade too. So entries, managing the trades, and getting out. Work on that stuff on a pair that's more volatile than the euro. Once you do that for a while, a week or even a month, then go back to the euro. By comparison, I bet you're going to find the euro not so tough, not so intimidating, not so volatile. Yes, again, still volatile, more volatile compared to the way the euro was months ago, for example. But if you're looking for a way to adapt, and that's one, I see that as one way to do it. Stretch yourself a bit and try. It's like I don't know. It's like, I guess, military training or training that I know some professional athletes go through. When you've been through a regimen of training or whatever, pick whatever, something that's difficult to go through. When you've been through something really tough, really hard to do, and then you guys get into a situation or an environment where it's relatively easier. Man, that it's quite a change. So consider it again. You're going from, for many of you have gone from being used to a euro that moves 120 pips a day. Now we're talking about a euro that can move more than 200 pips a day. Well, that's a more difficult thing to adapt to. But if you go from here to a pair that's much more volatile and trade that for a little while, then go back to the euro, you might find the euro a little easier to trade. So seriously, I would try that. I would hope that helps. Now, it doesn't mean you have to focus solely on a more volatile pair like pound Swiss or whatever your pair of choice is. I'd set up say a separate demo account. Set up a separate demo account and make that your driving range, to use a golfer's analogy. Make that your practice area. That's your the pips in the account, the amount of the dollar level, the pretend dollar level in the account doesn't matter. It's all about practicing entries and trade management on that account on a more volatile pair. And then and give yourself some time to do that. Don't think after trading it for after trading a more volatile pair for 2 days or a week that you've got it. I mean, I don't know how many of you read about this, but it varies for different people. But anyone ever heard a rule of thumb for building a habit? Anyone ever heard a rule of thumb for how long it take a build to happen? By the way, I know I'm pushing my time in terms of my allotted time here at Epic Street, and thank you, by the way, for the folks at Epic Street for making this event possible. I have a number in mind, a number of days that some have cited as a guideline for building new habits. I want to see if anybody else has heard that. And by the way, I'm not suggesting that that's a hard and fast rule. Nobody's ever heard that? I've heard 21 days mentioned in the past. 21 days as a kind of an old rule of thumb when it comes to how long it's taken to build a new habit. Sometimes when I say like a month, do something for a month, that's why I recommend it, because that gives you ample time. It gives someone ample time to not just build a new habit, but actually to shake old mindsets or shake up to sort of almost exercise old habits out of yourself. And with that, I think I'm done. I hope each one of you have derived at least some modest value from this event. Let me post again the link to the NFP event tomorrow. Oh, thank you, Vicki, and Maud and everyone up at Epic Street. I really appreciate it. Yeah, there's a link to the Mars NFP event. I'll be there as well. At least one or two of the other currency coaches at FX Bootcamp. If you want to ping me during that event, I may not be there for the whole thing, but I'll be there long enough. If you have a question, if you have a comment, I'm open to private messages. Send me a private message. We'll talk. Yeah, see you tomorrow, Maud, for NFP. And again, thanks to all of you for attending, for lending us your eyes, your ears, and especially thank those who have participated. And please provide your feedback not only on this webinar, not just today's webinar, but all the webinars that I provide here, and even to provide feedback to FX Street about what you think about the webinars. I'm sure they welcome the feedback. Folks, have a great day. Cheers.